Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, April 4th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The uptrending market remains firmly intact. I continue to say that over and over again. Perhaps we are at a cycle high or near a cycle high. Perhaps we are starting to show a little bit of exhaustion here above the previous month's high. Perhaps we need to pull back to the mean, right? A reversion to the mean may be necessary before we can get the next rise. But the market remains bullish overall. At the moment, again, this market is hard to go down. Even when it has gone down, it's been mostly sideways. Like last week, it was down one day and then sideways, and that was mostly the pullback. It's been very, very strong, even after yesterday testing levels above 28.78.5 and kind of falling back below it, and it just jockeyed for position around that level, and now it's trading around that area. Again, 78.5 is the key level to watch. That's the upper point of the key range right here, the top right there, and that's just a longer term key level. We can continue to mess around in this zone. Remember last time we were up here for a month before we finally broke down and dropped. Again, from the very beginning, we mentioned that it wouldn't be surprising if we took out the low last coming up and then come out here and take out the high and hit 3,000, and then we come back, right? So this market doesn't have to slow down. We just have to continue to watch the cues here, and overall everything continues to go up. But again, if there's any failure here to basically hold above that, recent pivot high here, just call it 28.60, that's going to be what perhaps leads to a broader pullback here that could be bought at the pivot range. So just some framework here as we head into the end of the week. We have non-farm payrolls coming out Friday morning. That could be something that the market's waiting on as well. But again, this has been mostly sideways, and then we had a little bit of a move up, and now again sideways again. So we'll see how that develops. If we look at the NQ, you'll see very similar price action again. This one trending up. This one's also holding above the previous month's high, and it is also right here at a very, very important key level. It's at the 100% extension. If we look at the wider, longer term, actually you have to go even farther back. This is the 100% extension on the very, very long term chart, and it's been holding right at that zone. This is right where it fell off last time around, and so again, this is a zone to keep an eye on. It's going to be right here about 76.50, 76.45. That's about where this thing really sold off, and now it's coming all the way back to that point. So again, we haven't found rejection just yet, but if we fail to hold above the recent 75.50 zone, that could open up a little bit of a pullback before we may see a continuation. But right now, inside day, very narrow price range. This market's been very, very quiet here, and again could be heading into NFP, and that could provide a little bit of a boost. Let's take a look at IYT really quickly here. If you look at IYT, this is the iShares Trust Transport Average, so it's a transportation ETF, and what you'll see here is that this one's been pretty good. Again, it's been a very good leadership type of stock here. This one is holding at and rejecting at resistance here. This is a range that has developed basically since the beginning of February here. It's gone mostly sideways in the range, and in the previous session here we saw quite the rejection up here at basically the 92.5 level. And so as long as price remains below 92.5, this could be an early indication that we're headed back to the previous month's close and perhaps the pivot range here, maybe the midpoint of the current impulse leg up. So that could be an early indication that perhaps we do see a pullback in the ES and the NQ, as this one tends to lead at times. So again, keep an eye on this one, as a failure to rise above 192.5 could suggest a pullback to the midpoint of this range and perhaps all the way back to 180. Let's take a look at crude oil. You'll see here with crude, this one remains rather bullish. Every pullback has been bought, and we've seen a very strong continuation, and that's just been the last few rotations. It started down here on the hard rejection, the hold, and that was the first move. A little bit of sideways, and then we've seen every move since. So very, very strong market here. It continues to climb higher. It finally got our last target here. So from this day when we rejected and we had the key range that was in. We mentioned that we could be looking at a continuation higher toward the 60 level right here, and even as high as the 100% target. Right on this right here, we saw the 100% target here, but on the recent move, for the most part, we were looking at a move to 60.65 and 62.70. Price got there, and now it's forming a little inside day. It's got a very narrow range. We have a very clear, steep, uptrending market with the PIMAs continuing the trend higher. So I would say that even if we do have a one-day pullback or a two-day pullback, it's still a buying opportunity until proven otherwise. The 60-65 level is a very clear area of resistance, and now will become support at 61. So in that zone, any pullback into that area could provide another opportunity to buy it. We may see one or two rotations before we go higher, kind of like we saw the last couple of times. But overall, this is the key pivot here as this thing continues to push higher towards 65 and perhaps beyond. All right, let's take a look at gold futures. Lastly here, this one continues to trade sideways to down. Again, we talked last week that any failure to establish acceptance above 1320 would suggest that we're still in this price distribution and would likely come down to test 1280. The best zone to look for longs here would be between 1270 and 1280, or at least to look for rejection, because right now everything's pointing downward. We have a very narrow range here, so if you look at the 5-period PivotBoss Advanced ADR indicator here on the 5-period range is telling us that 1, 2, 3, 4, 5 days, so from that high to this low, it's super narrow. It's less than 65% of average 5-day range, which is typically somewhere up here at around 27 points. We're at 15. That's 52.5% of average. So what happens is you usually, when you get that type of signal, is 5 to 10 days out, you usually hit a very big high point of volatility, of range. So right here, again, boom, you hit that point. Over here, didn't quite get that high, but got in there. It took a little while. This one, again, how far out before we're somewhere about 50 handles of range? I think that could be, again, to the downside. So from here, do we drop down to 1270 and then from 1270 bounce? Right? Because any failure below this key range low could offer a trap where you bring this thing back to 1315. So that's something I'm looking at right now, is how much lower do we go? Are we going to get a breakdown out of this range that then leads to a rejection back up? That is my preferred trade right now, as this is a very important market structure level, key range low, and sometimes when you have a narrow range, a failed breakdown, if that fails, could usually lead to a bigger move in the opposite direction. So that's what we'll be looking for here to see how this plays out of this narrow range. So we should be expecting some big time expansion here over the next 5 to 10 days. And we'll keep an eye on 1280. All right, everyone, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.